Politics and economics are decumanate. US stocks and FX are decumanate.
Okay, picture this. A company's stock, right, goes from $5 to almost $15. And not over years, but in just like 2 months. Between end of May and early August. That's pretty dramatic. So today we're doing a deep dive into that company. It's Applied Digital, ticker APLD. Our mission here is simple. Cut through the hype, figure out what's really driving this surge, look at the opportunities, but also, face the challenges head on. We want to give you the real story, fast. All right, let's get straight into it then. That kind of share price jump, it doesn't just materialize out of thin air. What's the core reason Applied Digital is suddenly making such big waves?
Well, you're right. It's not accidental. The bedrock, really, of their recent explosion in value comes down to their very aggressive focus and expansion into AI data centers. It's a major pivot.
AI data centers, okay.
Yeah, and the absolute centerpiece of that strategy is this huge partnership they've landed with CoreWeave. That's been the real game changer.
CoreWeave. Tell me more about that deal.
Sure. So initially, they signed a lease agreement for 250 megawatts, which is already substantial.
Yeah, that's a lot of power.
Exactly. But then pretty quickly afterwards, they added another 150 megawatts. So the total commitment just from CoreWeave is now up to a massive 400 megawatts.
Oh, 400 megawatts.
Well,
from just one partner.
Yeah.
That sounds enormous. But what does that actually mean for Applied Digital, in terms of dollars and cents? Does it fundamentally change their business?
Oh, absolutely. It's transformative. This single deal, the CoreWeave partnership, is expected to generate, get this, $11 billion in revenue over the next 15 years.
11 billion, okay.
Yeah. So it's not just a big number. It fundamentally changes their whole risk profile, their stability.
Yeah.
For a company that was, let's be honest, much smaller not long ago, having that kind of long-term, predictable revenue stream, it's huge.
Right. It moves them away from being purely speculative.
Precisely. It shores them up. It makes them look more like a stable, long-term infrastructure player. And that helps them get better financing for future growth, gives them an edge over smaller competitors. It's a really profound shift.
Okay, that stable financial base makes sense as a de-risking factor. But to actually deliver on contracts that big, they need serious boots on the ground, right?
Yeah.
Serious infrastructure. What are they doing operationally that allows them to handle this kind of demand?
Right, and that's where it gets really impressive, actually. They're not just signing deals, they're building out the capacity. Their flagship AI data center, it's called Polaris Forge 1.
Polaris Forge 1, okay.
Yeah, that's a key piece. It's designed to potentially scale up to 1 gigawatt eventually. That positions them perfectly to grab a big slice of this, booming demand for AI and high-performance computing.
A gigawatt, that's enormous scale.
It is. But here's what's maybe even more impressive. The speed. They've managed to slash their construction times. What typically takes maybe 24 months, they're doing it in 12 to 14 months now.
Really? Half the time?
Pretty much. That means they get capacity online faster, start generating revenue sooner, and frankly, beat competitors to the punch. It's a serious advantage.
Okay, faster build times. That's critical. What about efficiency? Because these things use a ton of power and water.
Good point. And they're innovating there, too. In North Dakota, they've rolled out some advanced cooling tech. They've achieved a PUE that's power usage effectiveness of 1.18.
Which is good.
Very good. Closer to 1.0 is better, means less energy wasted on cooling itself, and maybe even more significantly, it uses almost zero water.
Wow. Zero water usage. That's huge, especially these days.
Exactly. It's a win for efficiency, lowers operating costs, and it's a major sustainability plus. We're not talking small change either. These kinds of improvements could potentially save them up to maybe $2.7 billion over 30 years.
Okay, so they're signing huge deals, building faster, building more efficiently. It sounds like everything's going incredibly well. But, high growth stories, especially with massive building projects, they often come with financial strain. Let's talk about the other side of the coin. What challenges are they facing financially? Are there red flags?
Yeah, you absolutely have to look at the full picture. And you're right, despite all this positive momentum, Applied Digital is facing some real financial hurdles at the moment.
Such as?
Well, for one, their net losses have actually gotten wider recently. Operating costs are climbing, which makes sense given the expansion, but it's still a cost. And they're carrying a pretty hefty debt load, almost $700 million.
$700 million in debt. Okay, that's significant.
It is. Now, to be fair, their adjusted EBITDA, which is kind of like their core operating profit before things like interest, taxes, depreciation, it is positive. But it's still fairly modest compared to the scale of their investments and ambitions.
So spending a lot now, hoping for bigger returns later.
Exactly. That's the classic hypergrowth playbook, right? Make huge investments up front to build the infrastructure, anticipating much bigger payoffs down the road when it's all running and generating revenue. The tricky part is managing the cash flow during that build-out phase.
Right, bridging that gap. So given that debt, those losses, it seems a bit surprising that there's still so much optimism around the stock. What are the market analysts saying? Are they seeing past these current challenges?
Well, yeah, the market confidence is surprisingly strong, and that tells you something about how Wall Street is weighing the future potential against these present hurdles. Analyst sentiment is definitely bullish.
For example?
Well, Roth MKM, for instance, recently bumped up their price target on Applied Digital to $24. That's a pretty significant target.
$24, okay.
And if you look at the broader consensus, LSEG reports that 8 out of 9 analysts covering the stock currently rate it a buy.
8 out of 9, that's a strong consensus.
It really is. And it's not just based on hope. Reuters reported that Applied Digital actually beat Wall Street's revenue forecast for Q4. They pulled in $38 million in sales, up 41% compared to the previous year.
And that beat was driven by?
Directly by that soaring demand for AI cloud infrastructure we've been talking about. So what's really fascinating here is you can see that demand translating directly into actual revenue growth, even while they're making these huge investments. It suggests the market believes the long-term AI payoff is big enough to justify the short-term financial squeeze.
Okay, so wrapping this up then, what does this all mean for you, the listener, trying to understand this company and maybe this whole AI infrastructure space?
I think the key takeaway is that Applied Digital is genuinely at this really pivotal moment. They've placed a huge, bold bet on becoming a critical piece of the underlying AI infrastructure, a foundational layer. And based on the deals they're signing, the speed they're building, the operational efficiencies, and, the analyst confidence, that bet really looks like it's starting to pay off, maybe in quite significant ways. They're positioning themselves right in the thick of the AI revolution.
Yeah, this whole deep dive really underscores that picks and shovels idea in any big technological shift, doesn't it? As you watch this AI boom continue, maybe the question to keep asking yourself is, who's actually building the foundations? Who's laying the groundwork? Because, like we saw with Applied Digital, that's often where immense long-term value gets built, sometimes quietly, enabling everything else that comes after.